Circle IPO is a pretty big deal. Okay, CRCL, it's pricing right now. It hasn't opened. Looking at $31 open, higher than the 24 to 26 that was expected pretty much 48 hours ago. 24 hours ago is like 26, 28. I believe the market cap is going to be around 7 billion. Is that right? So the lead underwriters are, the main people. You got JP Morgan, Citigroup, Goldman. To get better than that, they have an option to sell an additional 5.1 million shares, which they're going to do. Kathy Wood said she's buying up to 150 million shares, which, ETFs, they got to do that at the open and stuff like that. 150 million
shares?
$150 million worth of shares. Okay. I'm sure she can get into these deals or create a private fund. I don't know if she does. I haven't looked at her funds lately, but I know they're probably doing a little bit better, right? With AI and a lot of innovation and stuff like that and coming back and stuff. I got to look. I haven't looked in a while. I want to take a look. I just like her. I really do, because everybody just rags on it, but you know what you're getting. It's kind of like with Michael Saylor. You could hate the guy, but again, he's been dead right. She hasn't been right on all her picks, but just being in this innovative trends, you know what you're going to get from her, and she provides the data to support that, and I admire that. Whether you agree with it or not, she has bad performance. It's not like, hey, in my industry, in this industry for 30 years, I can't tell you how many people I talk to that say one thing and do another. It's so many people are full of shit in this industry, right? It's disgusting, right? They'll tell you one thing, go right behind your back and say, at least like, hey, this is her, this is what you're getting. So I appreciate that. I really appreciate people who, even if I have a different opinion from them, that they're passionate about their idea so much that they're like, okay, this is my idea, and they put their own money behind it. What I get pissed off is when people say, well, buy gold, they don't even own gold. Or you should short Bitcoin, he has no idea, and they'll never short a Bitcoin ever, right? They just telling everyone else not to own it. That's why I get pissed off. And anyway, getting back to Circle. Circle's issue of USDC stablecoin. It's the second largest in the world behind Tether, but they only have a 20% market share. Compared to Tether, it's 67%. So put in perspective, Tether's market cap in terms of, the stablecoin market, it's 153 billion. USDC is 61 billion, and all of the stablecoins combined is just 12 billion. Right? So you have Tether, this monster in the room, and then you have USDC. Why is this such a big deal? Circle right now is the only pure play on stablecoins that you could buy in a public exchange, right? You could buy Tether, on crypto, but this is public, right? Stablecoins is likely going to be a $2 trillion plus market. That would make it one of the biggest stocks in the world, right? If you're looking at it from a stock perspective, if stablecoins was a stock. How many companies, maybe, two have $3 trillion market caps? NVIDIA, NVIDIA, Microsoft, and Apple, I would guess. Then you have the $2 trillion class, right? So you have all these companies, and that's fine. But if you're looking at this market at $2 trillion, this isn't my forecast. This is what everyone's forecasting. We're talking about the biggest banks. We're talking about the U.S. Department of Treasury says it's going to be a $2 trillion market. So why is stablecoin such a big deal? Because it provides a decentralized, trust-based approach to managing public sector data, which is much better than governments, which are centralized, right? That require tons of paperwork, manual work, red tape, all this massive fees, all this garbage, right? So it's the opposite of stablecoins, because stablecoins are going to streamline operations, provide better data protection, reduce fraud, much lower costs. They also offer much higher yields compared to all the shitty yields that your bank offers you. Guys, that is the definition of disruption. And you're coming to an industry that's trillions and trillions of dollars when you look at the financial industry. So you're looking at stablecoins could eventually replace centralized systems, similar to smartphones replacing pagers. Ooh. Public telephones. Remember public telephone booths? Gone. The yellow pages. How important was it to have the yellow pages? I know some of you listeners, if you're under, I would say 40, you're like, what's the yellow pages maybe? I would think. But the yellow pages, you needed it, right? That big book. Police needed it to beat their suspects. This way they didn't leave marks on them during interrogations. They used to take the book and punch the book. I don't know that personally, believe me, but I know that happens for a fact. I wasn't the best kid when I was younger.
That's awesome.
Think of the typewriter, Polaroid cameras. This is the disruption that stablecoins offer. And you're looking at these banks, and I always talk about this, and I get fired up about this moat that they've had for over 100 years. You know how difficult it is, Daniel, to start a bank? Difficult. You have lots of banks out there in these regional banks. Ask Frank Trotta, who I've interviewed, who I love, great. He sold Everbank TIA for $2.5 billion. Having him as a friend resulted in me going to a lot of Jacksonville Jaguar games and getting, good seats because of him, because he's a great guy. And they sponsored that stadium. But he's been trying to open another bank for like 4 years called Battle Bank, and it's been nearly impossible from a guy that's been in the industry. He'll probably do it pretty easily. I don't know if it's finally, I know Rick Rule's back in that deal as well, and it's probably going to happen now that Trump got elected. It'll be a lot easier, right? So you're trying to disrupt, even forget about disrupting the big four banks, right? So if you're looking at those, the top four, they generate over $100 billion in revenue, not last year, last quarter. So if you're looking at what's going on with stablecoins, learn about this market, because it's massive. I mean, Citigroup says this year, 2025, is blockchain's chat GBT moment because of the positive regulatory environment, which includes stablecoins. Big statement. They actually had a special call on stablecoins last month where it also attached a 47-page report, which is written by 12 of their top people who basically run the digital assets division. Okay, 12 of the top people. These banks have massive digital asset divisions now. Now they're playing catch up. So if you're worrying, or just not worrying, but if you're thinking about how big this market for stablecoins could be, because people are saying 2 trillion, some people are saying 3 trillion, whatever. I'm going to tell you right now, stablecoins, right, which is an alternative, right? It's cheaper, faster, better for customers, provides higher interest rates, more safety. It accounts for only 1% of the global M2 USD money supply, which processed over 33 trillion in volume last year. You have something that's 1 million times better than the alternative that's processing 33 trillion in volume in payments, right? And they only have 1% of that market. So how big could this be? Oh, how big could it get? A lot bigger. And it's not a joke. So Circle is a pure play on this from an equity perspective. It's coming out. I think that this is going to be a $100 stock. It's coming out in the 30s, guys. You know, you could be a little patient. I usually never say to buy an IPO, but they IPO'd right now. I get it. I usually never say because it's usually a liquidity event for investors, but you know, you saw CoreWeave like just go through the roof. You know, some of these IPOs work.
It did pull back, to your point.
Yeah, it did pull back in the beginning. Yes.
With the whole market.
It went from 40, I think it opened up at 50s and went below 40 to the 30s, right? And that's when I think NVIDIA backstopped it and said, hey, we're going to be buying it a lot in the 40 level. So
but your point, you can be patient, except for that only reason was because it was a mass market pullback.
Yes. And if I would buy Circle, don't buy a full position. I would say, you know, when it comes out, buy a little bit and just hold it for a few months. So listen, if it does run like CoreWeave, this is what we did. We didn't even make an official recommendation in an IA newsletter when it was 100. We said, hey, you know, buy like a quarter position because this thing could really go up and it's 150 now. And if it comes down, you could add to it, right? So what does that do psychology wise? It allows you to own a position and make money on it. And if it comes down, you're like, hey, I could add to it instead of not owning it at all and keep missing it. Okay, that usually is a good strategy that I've learned because I've missed stocks. I'm like, why don't you just buy a little bit here? Because if it comes down, you could buy more and say, okay, now you're going to get a better cost base. If it goes higher, like, hey, at least I bought some. You know, it's better than watching a stock that constantly, like a Palantir, goes to 20, 30. Shit, I missed it. 40, I missed it. I don't want to buy this high. 70, 80, it's 130. I've been through that. It's not easy. So Circle, you know, I think it's going to be a blockbuster IPO. It's going to come out in a little while. Let's see what it comes out with. But I think it's going to be a strong buy because you have everything in place, guys. You have the regulatory environment here, which is great. You have an industry that's ripe for disruption, and these guys are right in the middle of it. And these guys are doing a great job. So stablecoins, start learning everything you can about stablecoins because this is a massive market.
I think the coolest thing on just a couple of things on Circle is I think the story it's going to tell is going to be amazing for the stablecoins because right now, when you hear stablecoins, you think of something different. And really, Frank, what I think is the breakthrough. And I was having a conversation with a gentleman the other day, and I said, hey, you know, if you're moving money around on the back end, if you're sending money from your cell phone to a friend or family member or anybody, does it really matter to you that crypto or stablecoins are behind it? As long as you can know, hey, this is fast, cheap, safe. And the answer of his, of course, is no, because nobody really cares about the inner workings as long as you have that general sense of, hey, this is okay and I can do this. That adoption is only going to be fueled by events like this. And I've talked, Frank, about how, hey, stablecoin really from a business standpoint right now is a play on interest rates. And their profit started to go higher in 2022 when the Fed started raising rates. But I don't mean to knock it and say this is only an interest play on the profitability side because Frank, guess what? As a services business, what can you offer? You can offer more services in the future. And that's what will be exciting because it's like Frank talked about Facebook a long time ago when the stock was getting made fun of after going public and selling off. And he said, listen, these guys got 1 billion people on their platform. You have to give them the benefit of the doubt to somehow figure out how to generate revenue from 1 billion people. That's the hard part. While they have a very low percentage and Tether is the dominant factor in the stablecoin world, the fact that you're going to be public traded, transparent, that is going to help them absorb a market share faster, very quickly, in my opinion. So you get the people in, and then you can offer different services and such. So yes, this is going to be just like every other high flyer in the short term. If this thing spikes, all you're going to hear is this BS about valuation. Ignore that. Stay tuned in here. These guys are not going to just sit on their hands and simply collect interest forever. It's going to be an asset platform and then do services just like everybody else in that financial industry. But it is a better mousetrap. Keep it simple. That's why you're going to see this thing succeed. I teased this yesterday. And I need to address this because Jamie Dimon did a talk at the Reagan Forum, Ronald Reagan Presidential Foundation Institute Economic Forum. I told everybody on Wall Street Unplugged yesterday I would encourage you to listen to it, but I want to just go over a couple of things he said. Two huge misrepresentations by the media, in my opinion. You guys have probably seen headlines where Jamie Dimon says, China's not afraid of this. They throw 10,000 engineers at a problem, and that's all they got to do. If you listen to don't be lazy like the media and don't just try to be in the world of clickbaits. I understand we all need everybody's attention to get our message out there. Jamie Dimon said, China's not afraid of us. About 30 seconds later, Frank, he also said, he's not worried about China either. And if the U.S. gets its own house in order, that's all that matters. And we can be the biggest superpower and continue to be the global reserve currency and all that kind of stuff. This is why I appreciate Jamie Dimon, because somehow, Frank, this guy can walk the middle of the fence and yell at Republicans and Democrats and still smell like a rose. I don't know how he does it or what he has on people, but that's why he's the best bankster on Wall Street.
He has the biggest bank in the world that everybody wants to be a part of, that has access to every country and everything. So politicians better kiss his ass instead of the other way around.
Evidently, listen. Let me just foreshadow this future rant, because the Fed is the most important thing and then the banks. So no doubt there. I just have to give credit where credit is due. He takes shots and says, hey, you ought to be taxing carried interest loopholes. That's a big sin in the Wall Street bankster world. And then he says, they ought to get rid of SALT, even though it costs me a lot more money. It's better for people. And what he talked about was, hey, everybody needs to get in the idea of sacrifice and self. What can you do to make your country better? Because he's on this 3% growth. If you get to 3% growth, that's going to be a good thing. Now, China was the number one big misrepresentation, in my opinion. Number two that you've heard was the crack in the bond market. And people love to take this. Jamie Dimon says there's going to be a crack in the bond market. Again, unless you're lazy and you didn't listen for another few seconds, he said, Frank, the bond market's going to crack. It always cracks. He's talking about it like it's just another day. It's part of the world we live in. And he said, JP Morgan's not going to panic. You're going to panic. And we're going to probably make more money. Then we're going to get blamed and, causing it or liking it and all that kind of stuff. And I appreciate that. He then said the crack in the bond market, Frank, his timeline is? When? You're probably thinking tomorrow if you read any of these piss poor
I know, they're
reports.
all over the place. He says it's going to crack.
6 months or 6 years. I don't know when it's going to happen. It's just going to happen again. That is like Warren Buffett, and I'm not taking a shot. I'm giving a compliment because he does it in such an easygoing tone that you just have to respect it. And it's because they've lived through it and they have knowledge, and you ought to pay attention to that. The concept is just, hey, stocks go down 50% every once in a while. You have market crashes. It's part of the game. Yes, that's easy to say when we're back near all-time highs. It's difficult to hold on when you're in the moment. But these guys have done that. So biggest reporting there is, hey, the crack in the bond market may or may not happen in 6 months or 6 years. Now, what's the value and takeaway of this? You're seeing all these comments about the bond market because it's politically popular right now with the big, beautiful bill and all the back and forth that we've talked about. The point is that right now, we are in a massive tectonic shift, Frank. And all he's trying to do is be nice and say, listen, the government is so floated up and so pathetic that we are literally trying to convince you minions, me and Frank included, and all you listeners, that we're actually going to get out of this hole. 36 trillion, which is a lie. It's well over 150 trillion when you add in liabilities. We're never getting back to that. And now people are starting, through crypto and gold and different things, are starting to realize like, hey, this whole game has been completely fixed. And now you even have Trump's sons admitting it, going, listen, we were in a financial pyramid scam. We were just lucky and at the top.
Yeah.
And then what happened? Well, our last name got demised and we got cut off. So that's why they went into crypto. Now it's more detailed than that. But
it was good. He did a good explanation of it. Yeah, showing how, they were forced into this. It wasn't like they adopted it.
And you can tell everybody else is in line and carrying water because nobody pushes back. And Andrew Ross Sorkin was sitting right on the desk when he was at CNBC saying that. And he couldn't say anything because guess what? When the big tiger turns on you and you're a spineless person, well, you have to jump ship. And that's pathetic. So that's why this tectonic shift is going on, because the cat's out of the bag. The bond market, listen, unfortunately, the Fed is going to step in and control yield curve control or implement yield curve control again. There is no way that free economics are going to be allowed to run and tank everything. This is the Wizard of Oz and Willy Wonka, and it's even worse than that. And the fact that they continue to try to sell that idea is just hilarious. So the value here is, I don't know why anybody would run into bonds right now. I would just watch them, gauge them, and take advantage when they punish the stocks. Frank, if you want to get 3 to 5% on your money, why the hell would you go outside or any long term? Just go to a money market. Interactive Brokers, I think, is still over 3.5% on your money market.
Well, the company we're going to recommend today is even higher than that. So we'll get to that in a minute.
Okay, there's my case in point. Watch the bond market. Listen to all these guys tell you how crazy it is. Yes, there's going to be cracks in the bond market. Yes, there's going to be pains in the bond market, but that's why you invest in Bitcoin and gold and stocks. Because remember, this is the big takeaway. They are going to try to just continue to fix the system and prop it up. Inflation, whatever you want to call it, stupid policies make asset prices go higher. That's why you want to own assets.
Yeah, and you're looking at JP Morgan. Just look at that market cap. JP Morgan's market cap is $730 billion. The next largest in that sector is Bank of America at $330. Wells is $240, Citi is $140.
Nice.
So, if you're looking at JP Morgan,
Jamie.
Just, why he could say whatever he wants and having access to all the capital markets, like he's going to get a little more leeway. Not to mention if he wants to be the next Fed chair.
Nah.
You think so?
Well, I don't think
it's open to him.
I don't think he's friendly enough to get nominated. Yes, I think he could make it.
He's
through the
nominated by president.
Yeah, that's true.
I mean,
I know, but Trump, they don't get along.
He likes to do his own thing. Like he says
long
what he
story
wants to
short,
say.
too, again, I'm a big fan of him. I'm not saying he's not a bankster and all that. I'm simply saying he's got a great story. And when he was fired, and he's open about this, and then he took over that bank, and then I think fired that guy. It's awesome. So. Humble guy. Listen to that interview. I've listened to it twice. I'm telling you. And his advice for everybody else towards the end of the interview, it's about 32 minutes. I'm telling you, I ought to cut it and put it on X. It was amazing. Got to give credit where credit is due. Got to keep the banksters close to you, people.
All right, let's get to our pick.
Our pick. Well, you teased it about. I'm embarrassed. I don't even know the.
Like a nice dive into it. I think when we look at this stock too, I liked for both of us to look at it from different angles. This way, we both we'll look at it and we'll say, hey, this is a new recommendation, and we really don't share our notes on the new recommendation sometimes. This way, we could say, hey, these are the reasons I like it. These are the reasons. So this way, it's cool. It's new to both of us. But I know you like it for reasons that I'm gonna, pretty much different than I like it for. But it's definitely a good pick.
Yeah. Well, let's see. Pick is Robinhood. Robinhood Markets, a cryptocurrency / stock exchange. They really are a trailblazer, as Frank mentioned yesterday on Wall Street Unplugged. They blew the doors open with this commission-free trading to gain retail investors, and they're one of the best growth stories that has been around in the past few years. Frank, if you look at it peaked out around 65-ish earlier in February, sold off over 50% to the 30 mark. It's rallied along with the markets back over actually 140% from its lows. But as you can see from the chart, this thing is breaking out. And when you see a stock breaking out, you want to just buy that and ride the momentum. Now, why is it breaking out? Well, it's breaking out because the general market is breaking out. But number two, it's breaking out because it reported solid earnings just a few weeks ago on the 30th of April. They beat earnings per share. They beat revenue estimates. Frank, funded customers, so growing customers at 8% a year. What's impressive, average revenue per user. That's a major metric in the exchange or brokerage world. Frank, up 39% year over year to $145. They are gaining subscribers and they are increasing the profit per subscriber. That's amazing. These guys do credit card services as well. They're one of the, how would you say that, Frank? I'm not being funny in this. They're very popular and they're a great fad right now because they have the younger retail investor. And I'm not saying that
I love
they're
what
just
says it's like
ship.
a meme stock.
I don't mean that in a way.
I love when he says it's a meme stock. It kind of makes me laugh when he says, hey, it's a meme stock. I'm like, it's not a meme stock. This is a real company. This is not up.
It does have that feeling. And we're not trying to play that, but you're right. I'm not saying that it is a very gamification type deal. If you look at their app and you make a trade or anything on it, you got the confetti, and I think that's kind of BS, but hey, to each their own. The point is that I'm not saying that the retailers are going to jump ship. They latched onto this brand. And as you know, and as Frank has talked about, brands are very powerful.
Yeah, you might say, okay, it's trading at 60 times forward earnings. All right. And you look at Charles Schwab, which has twice the market, it's $6 billion market cap. You're looking at, $160 billion for Schwab trading at 20 times earnings. And people will say, okay, this is like, trading at 3x premium. It deserves it because they're growing much faster. The people are spending more on these platforms. And they continue. You say the innovation, which we talked about yesterday, not only are they in crypto, and so much is going into crypto, and they have this younger generation, but so much is going into this, and you have this massive long-term secular trend that they're a big part of. People feel like they could trust them. They like this, right? This is like, the younger generation, again, is this whole, like, I hate Wall Street. This is kind of like an anti-Wall Street play, believe it or not. That's how they see it. But what I really love with this company is they continue to innovate. We all know how they innovate. We spoke about it yesterday, just saying, hey, we know we're not going to charge fees and everything. And again, we know they make fees on trades and take a small percentage of that. And it disrupts the entire industry. But now when you look at this company and what they're doing, it amazes me because the platform, one, is very easy to use. So you're getting more members who are not used to stocks and getting into stocks, which is a great market. But they're taking market share. But they also offer things. Now they're offering 5% yield for gold members. And I think it might be down 4.5%, which requires, what do you have to become a gold member? It's a $5 monthly fee. I mean, holy shit, And not only that, the gold membership also, you know what they do on a brokerage firm? they receive a 3% match on their IRA contribution. That's pretty cool stuff for a brokerage firm, right? Because if you hold your money in E-Trade, because I have a small E-Trade account, their interest is shit. They don't give me anything. And that's why I move 90% to Interactive Brokers. That pays me a much higher interest, right? To all my money that is just sitting in a money market account. So, when you have these things going on, I know Morgan Stanley owns E-Trade, they're changing that and trying to implement services, but they're always ahead of the market. They're always innovating in ways that everyone else is following. And, as long as you have that, you deserve a massive premium. And that's why you're growing. That's why the stock's at all-time high. That's what's going to continue to go higher. I mean, they're going to continue to take market share because of the innovations. I mean, that's where Interactive Brokers, when they say, hey, we're going to be offering, a much high, when they said we're going to be offering like that, a much higher yield. And also, the margin requirements and stuff like that. I mean, it was a massive shift in Interactive Brokers that changed the landscape of the company. Right. And saying, hey, our margin rates are much lower than everybody else's. And who knew? That was the marketing pitch. Sometimes you don't know the marketing pitch. I'm sure they didn't know it was going to be a big deal. And a massive amount of money started to flow into that brokerage firm. And it's so easy to transfer money from one brokerage firm to another. It's very simple. Right. And the fact that process is simple, if you're not happy, it's not this. It's like, for example, I subscribed to 3 different services. I think they were like $34 a month. Out of nowhere, I just got, renewal fees for like $350. I'm like, holy shit. You know what I mean? So the renewal fees are, at least charge me what you're, if you have a special offer and say this is what the offer is. I didn't even get any emails on that. So when I go in there and try to actually complain about it, I can't even cancel the service. They're saying, oh, we sent you emails. I didn't get any emails. Then I go to my credit card, and the credit card's asking me lots of questions because I'm going to do a charge off because I'm like, I don't want the service. Yeah. When you provide difficulty in things that you do, it's just you lose customers. When you provide something that's very easy to transfer from one place to another, kind of like when you bring your car in, right? And you want to buy, a new car and you're trading your car in. They make it very easy. And like, hey, we're going to look at it. And they come out in like 10 minutes and say, okay, this is what we're going to give you. It's not the best offer a lot of times, but sometimes you negotiate that offer. But as long as you make that process easy, it makes it really hard for you to sell your car on your own. It's very difficult for you to sell your car to someone randomly on your own compared to doing it. So when you provide an easier service, which they do, and everyone does in this industry, and now you have this platform that's just, higher yield, gold membership. People love it. It's easy to use. Now you have the crypto. It's already integrated. When everyone's like Charles Schwab is just starting this stuff, it results in more and more users coming to this platform, and they're seeing massive growth. So they deserve that premium. And I think this thing's going to go a lot higher from here.
Yep, I do too. And then not to mention, we toyed with this yesterday, but Bank of America is out saying this is a shoe-in for the S&P 500. That should be announced tomorrow evening or Friday. Remember when Coinbase got announced, it went up 23%. Bring that up again because I sold that early. But the point is that this is a momentum breakout for me. I've missed this. We've talked about this stock in the past, but the one thing I've learned, and it's not a guarantee, however, when the stock breaks out to a new high like it is in that chart Frank showed you, we'll include a chart in the write-up. It's just got a lot of momentum. You just want to jump onto that. And the stock is running. We have a buy up to of 76. It's right around there. It's been rallying 4 to 5% today. We are just saying buy it. If you can buy it, the cheaper the better. But even if this thing pops, try to buy it today, get in, and then we just want to ride the momentum. Listen, the market likes round numbers. I don't know why this thing doesn't pop to 100 or more, and we'd have a quick profit and move on.
Yes. So you were talking about a lot of stocks today. I'm going to mention one more thing. Usually we mention that. So what did you say to buy? What's the buy up to on that?
Buy it at current prices because I had 76, but it was 77 just a minute ago. Now it's a little under that. So we're going to buy it at current prices, but lower the better. But we have 76 on there. If you get it and it's 76.50, buy it.
Or 78. So now we
want in for this momentum.
Yeah, we think it's going to. So one thing I want to mention too before we go here is, we always talk about gold. We talk about Bitcoin. No one's ever really been talking about silver. And silver's quietly just broke past $35 an ounce, which is its highest level in 13 years. And people say, well, is that because of gold? Is that because of Bitcoin? Is that because of deficits? Not really. I mean, you're seeing huge industrial demand. You're seeing, now we're seeing rare earths that are produced mostly by China. We're seeing it filter down where it's hurting us. There's reports going by semiconductor companies saying, hey, you know what? We need this stuff. Not that silver's a replacement for this and stuff, but there are industrial uses. But there's just ongoing supply deficits. This is being driven by, supply-demand fundamentals. Just like Bitcoin's being driven by supply-demand fundamentals, right? There's a limited supply. Supply growth is slowed dramatically, right? It's only 450 Bitcoins produced per day. And now you're seeing all these institutions, everyone get in. Larry Fink saying, deserve a 2% allocation. Everyone's portfolio, all these, 401k is going to be offering it, right? We're not even talking about strategic reserves. It's just there's not a lot of Bitcoin, and you see this massive demand. Not to mention everyone's trying to copy Michael Saylor's strategy and this leveraging strategy and stuff like that. So, you have to look at it's not just when you're looking at silver, gold, Bitcoin. Sometimes you look, the macro picture. This is being driven by you're looking down like bottoms up, like supply demand imbalances. So let's see where silver goes. It's great. I know a lot of people that I've interviewed in the silver market. Keith Neumeyer is one of them, big silver companies. Also, Rick Rule, I'll try to get some of them on as well. Silver hasn't seen its day in a long time, but pay attention. I mean, it's nice to see silver breaking out. We just like to see different trends and stuff like that. So let's see, because I know even in silver and even in gold, as high as these prices are, we're not seeing that follow through where, yes, we're seeing producers go up and some of them do well. They should be going up a lot higher considering where these prices are right now. It's going to offer a nice opportunity, which is great for my Canadian friends who've been in these markets and that's all they do. And it's been a really shitty market for a long time outside of the past 12 months when gold started ramping higher and stuff like that. Now it's silver. I love to see it. I have so many friends in this industry that bust their ass. And no matter what you do, what your management team is and how operate, if you don't have that underlying commodity agreeing with you, nobody just pays attention. Nobody cares, right? So I think you're going to start seeing a lot of money, institutional money flowing into the sector. Now you're going to see more capital raises. And there's a lot of great projects that you're going to see getting funded even on the small level. Not from the mid-tier, not from the large, but even on the small level where you're looking at a lot of these junior miners and you're going to start seeing these things when they go and this cycle change. I'm surprised because these prices are really surging now in silver and gold. They haven't hit, these all-time highs. They're still down incredibly from their all-time highs and they should be a lot higher. So, you're going to see a lot of those names pop up. We'll also be working with a lot of those names as well in terms of a consulting and marketing division, which is good as we go to more conferences and stuff. But yeah, keep your eye on silver. A lot of you guys should own silver and stuff, which is cool. Hopefully we can see a lot of the stocks follow through now. Silver has clearly broken out. Let's see if it can continue that momentum. I think it is going to. So just something to notice. Many of you have noticed if you're in the mining industry, some of you haven't if you're not, but something to pay attention to because the stocks, compared to where silver is, the stocks that are in this industry are dirt cheap and you don't have a lot of producing silver stocks. You do a few, but maybe, a good 3, 4, 5 of them that are really like separate themselves from everyone else. And really quick before I go, the conversations that I had with Keith Neumeyer are incredible because he knows exactly what price silver has to go, where he's cutting costs, he's laying off employees, he's stopping production at certain sites. Like he knows everything being in this industry for 30 years. And that's why I love talking to him. And I'll try to get him on the podcast so you can talk more about, silver, gold, and all of his companies that he's created over the past few years, which is really cool. Just has a high success rate. Very good. So I'd like to get him on. And anyone else you think that would be a good interview for this podcast, let me know. FrankCurzioResearch.com. And I think that's it, Daniel.
Daniel at CurzioResearch.com.
I think that is it, though. Yeah. I can't believe we're going to end on silver. Is that exciting enough?
Yeah. Anything's exciting when it's breaking out.
Yeah, that's
People
true.
like to make money.
That is true.
What do they call it? Volatile cousin of gold? Is that what they say?
I don't even know what they say.
Volatile
I don't know.
Brother, cousin.
I don't know. But everyone's talking about the 100-to-1 ratio and shit like that. I don't know. To me, it's just supply, demand, and balance. And now you've seen silver really take off in copper as well. And just, listen, mining. And there's a sector that's underowned, significantly underowned, underperformed. I just think this, if you have a 12-month, only a 12-month, I'm not saying if you buy this stuff for 2 to 3 years, if you just have a 12-month time horizon and you buy some of these stocks and just forget about them, you're going to be up a lot on them, I think, in 12 months because they still have tons and tons of upside. So, again, we'll end that note on silver. Again, questions, comments, feel free to email us, FrankCurzioResearch.com or Daniel@CurzioResearch.com. And enjoy the weekend, enjoy the playoffs, have fun. Take care.